Welcome back, investors, to Ticker Time News. I am Adam. Thank you for joining me for the After Hours show. It is a privilege to be here for you. We've got a lot to talk about like we do every day. We've got stocks, crypto, earnings coming out, many companies to talk about. But remember, the most important thing and the whole reason why I do this live stream is what's on your mind. What do you want to talk about? If you have a company ticker symbol that you would like questions answered on, leave the ticker symbol and your question in the comments, and we will go over it live during the show. So thank you again for being here and joining me. I'm looking forward to our conversations, and let's just get right into the markets today. So stocks drifted lower today as inflation concerns outweighed upbeat earnings reports. Housing starts unexpectedly edged down last month, a sign that high costs for building materials continue to hurt the sector. Meanwhile, Lowe's, Target, and TJX beat earnings forecast after both Walmart and Home Depot topped estimates yesterday. The Dow Jones closed down 0.6%, all because of Visa, and it sank about 5% after Amazon said it will not take UK-issued Visa cards as a form of payment. That is pretty big news. Also, the Nasdaq fell about 0.3%, the S&P shed about 0.26%, and the Russell 2000 underperformed by 1.2%. They were down today. 7 of the 11 S&P 500 sectors closed in negative territory. The energy sector was the worst, down 1.7%, financials second at down 1.1%, and materials down 0.6%, while industrials were also down 0.6%. Those were the most underperformed sectors for today. Now, let's hop over to cryptocurrency and start there. Bitcoin has stalled. Right now, it's at 59,961. It seems to be holding right around this price support line right here, and it's about $59,900. That's the support level that Bitcoin seems to be holding onto today. It keeps fluctuating, tapping into the 60,000 and then dropping down to 59,000 and some change. Now, the 21-day simple moving average is up here, and it has dipped below that. It dipped below it yesterday. It is now using its 50-day simple moving average as support. As long as it continues to build up or consolidate along that 50-day moving average, it is still in a positive or bullish structure on the chart. If it does dip below that 50-day moving average, then we could see maybe a short-term bearish look on Bitcoin. Now, Ethereum, we'll look at Ethereum too, ticker symbol ETHUSD on TradingView. I use it for all the charts. There's a link in the description to a free account. I use Coinbase for the data. Now, Ethereum is also bouncing off of its 50-day moving average today. Yesterday, it was still above it, but today it came down and touched it. But the good news is Ethereum is rising. It was at a low today of around $4,068. It is up right now to $4,254 and kind of holding right there in that spot. So Ethereum has taken a more positive move today, being up quite a little bit above that 50-day moving average. And that's a very important moving average for crypto and stocks. Very important. If you are above that 50-day moving average, it typically means a positive or a bullish structure. If it is below that 50-day moving average, it is a negative or bearish structure. Now, a company that has been on fire recently is Matterport, ticker symbol MTTR on the stock chart. Matterport has been up the last 3 days. It broke out of a symmetrical triangle after bouncing around for about a week or so. It was up 1.4% today, a little smaller than yesterday's 5.1%, and the day before 22.3%. You add that all up and we're nearly at 30% for Matterport in just the last few days. Now the company, I put a video out probably a week and a half, maybe up to 2 weeks ago, talking about Matterport and how I felt it was underappreciated by investors. Now the stock has ticked up since then. Not saying that my video had anything to do with it, of course not, but it is an observation that I had on Matterport, and I feel like the valuation now is starting to come into fruition, or maybe I said that word incorrectly. Forgive me if I did. I think Matterport is now starting to fill up that valuation for the company to be more appropriate for what it has to offer. Remember, stocks, you can boil it down to this. They are what the future of the company looks like. That's all stocks are. If the future looks brilliant, if it looks bright, the stock's going to rise. If the future looks negative, then the stock is going going down. And a prime example of how that future return, or what that outlook is looking like for the future, it plays into on this company. Let me pull it up. They had earnings today, and they had a downbeat guidance. And that company is Cisco. Their ticker symbol is CSCO, Cisco Systems. Now, they reported their earnings today. They are down 5.1% in after hours due to poor guidance. And this is a prime example of why maybe a company can have a decent earnings report where their EPS and their revenue maybe comes in line, or maybe it beats estimates. But if their guidance, if their future doesn't look that good, then the stock will pull back. And that's exactly what's happening to Cisco Systems right now. They were pretty decent on earnings. If I pull this up right here, you can see they beat by 1%, almost 2% on EPS, and they were about in line with estimates on revenue, about $12.9 billion. They were off by about $83 million. And the percentage, though, that's 0.6% that they were off. That's pretty much in line with estimates. So the earnings report itself on those headline numbers did not look that bad, but the guidance that they gave was weak, and they showed lower profit margins for the future. So the stock is reacting to that by coming down. And that's why I always say with earnings report, it's not about the headline numbers, EPS, revenue. They are important, but the most important factor for a stock going up is what is the company going to look like in the future. So if that guidance isn't good, the stock pulls down. And I know I might sound like a broken record here, but that's what's happening with Cisco Systems. Now, they were down over 6%, and since we've been live here, they are now up a few fractions of a percent. Since we've been talking about this, they're now down 4.95%. So the stock is rebounding a little bit here in the later after hours of for the company. Now, they did bounce off of their 50-day moving average. And again, it's why I point out the 50-day moving average so much when we're looking at stocks, because it really is a very important line that is respected by investors, but more importantly, traders, people who are trading back and forth on stocks. They respect the different technical structures of a stock on a stock chart with technical analysis, and they use these lines for a reason, and that's why they're important. Just kind of sharing that little bit there. Now, they have a market cap here of $239.3 billion. So this isn't some little company. Now, if you notice here, they have been trading off of their 50-day moving average since November the 2nd, and it's just slowly coming down. And with this guidance, the stock will continue to fall a little bit further. But that's getting off topic there a little bit for Cisco Systems. Now, another company or two that I should look at, or maybe three, in the EV sector, we've got Lucid Group, we've got Rivian, and we've got Tesla are kind of the leaders right now for electric vehicles. Let's pull up Lucid first. Ticker symbol is LCID. And let that load on the chart. They finally found some resistance today. They were down 5.3% during regular hours. They are down 2% in after hours. Now, this is a daily chart that we're looking at, so each candle represents 1 day. And you can see here, this company has been rising for a while now, for a couple of weeks. They have been totally outperforming the market. They've been outperforming other EV companies, and they've been doing really well. But when a stock goes up really fast, it went up 23% yesterday. It's got to come down, right? It's got to give some of that back, and that's what's happening with Lucid today. It finally, some people are taking profits on this incredible rise. Now, Lucid also said on CNBC today during an interview that they're looking to expand into Asia and the Middle East by the middle of this decade. So maybe in the next 4 to 5 years, we could see Lucid springing up in Asia and the Middle East. Now, the next one to look at is Rivian. It has been on fire since its IPO. Ticker symbol is RIVN for Rivian. It finally found its ceiling today, and it has pulled back 15% during regular hours. After hours, it's down 1.4%. This company, since its IPO, has just been skyrocketing. And a stock cannot only go up, it must come down as well. So that's why it's pumping the brakes today for Rivian, which isn't a bad thing. The company has gotten way overextended. If you think about its market cap at nearly $130 billion, wow, that is pretty big for a company that's just producing or just starting to manufacture its vehicles. All right, the next one, let's look at Tesla. Now, Tesla is TSLA. They didn't fare as bad today, but it's been volatile since Elon Musk said that he was going to sell some of his shares. Now, Tesla was up 3.25%. Today, it's down about 0.2 or 0.3% in after hours. It still had a very nice bounce today and performed very well. It got to its 21-day moving average. It broke above it for a little while today, but then pulled back down, and it's sitting right on that moving average right now. And that's kind of like a teeter-totter there. Of course, it is way above its 50-day moving average, so it is still a very strong structure for the stock chart. If we look here, let me pull up this. I'm going to draw 2 lines on here to show you this structure right here. The top candle here, and I'm going to go down to the top of the candle here, okay? And now I'm going to put another line in. I'm going to go from here to here. And it's kind of going, the bottom line there is kind of going down. So we're beginning to start to build a structure of maybe a falling wedge, potentially. And if that's the case, then once this wedge starts to reach its nexus point where the price is not moving as much, right? The price is getting tighter. It maybe moves 2%, 1%, less than 1% each day as it's moving forward in time. And as it's doing that in this falling wedge pattern that it seems to be starting, then we could see it reach a bottom, a bottleneck for this structure here. And then we could see a breakout again on the stock. So it looks like that's what it may be trying to form right now. It's still a bit too early on the daily chart to really call that out and say that's what's happening, because we've only got 2 points of contact. We really need 3 points or more for a line to connect to really say that pattern is, without doubt, what that pattern is. Okay, are you still holding your RIVN? I know you got in cheap. Yes, on RIVN, let me go back here, RIVN. I've traded RIVN around. I bought in on IPO, and then I sold the same day. Let me go to a 4-hour chart to better show this. And this is what I'm talking about for Patreon members, putting together this buy-sell signal. So that way you don't have to copy what exactly I'm doing, but it just gives you another data set. So I got to go deeper. Let's go to a 1-hour chart here. It's really not showing the picture. Okay, here's a better picture. Let me put a couple of markers on here. All right, so it IPO'd on the 10th here. So let's do this. That's the 10th. That's day 1. And then we're going to day 2. Back up. Okay. All right, that's day 2. And then we're going to get to day 3. And then we had a weekend. So we jumped to the 15th. Okay. All right, so I'm going to show you what I did here. On day 1, I bought in at the IPO for RIVN, but I sold on the same day. Day 2, I did not trade RIVN at all. Day 3, I bought in the morning. I held to day 4, and then I sold out completely on day 4. I thought it was really getting overextended at that point. I missed out on the next days, but that's okay. You don't get all of it. And if you do, that's when you start to lose. So that was the trade that I did for RIVN. I am not holding any right now, but I did day trade it. And then the last one would have been a swing trade where I bought on one day and then sold on the second day. So that's what I did with RIVN, 3 trades in all. But I am out. I do not have a position right now. I do think it is a bit overextended still at this price point, even though it came down today significantly. If it came back down into this maybe $100, for sure, I would get back in at $100. But if it came back down to this price range here, 120 to 125, that's when I would think about picking up maybe a partial position, not a full position, if it came back down to this price range here. I'm not sure if it will. It could. I almost think it should. I do believe a $130 billion market cap for RIVN is very extended, especially since the company, I mean, we have no earnings yet for the company, right? They haven't even done their first earnings report. That will reveal quite a bit. Even though they dropped a ton of information when they went public, I still want to see that first earnings report to really get a handle on how this company is set up financially and how it's going to operate. Let's see here. Nice. I made money first day, but never went back. Yeah, when I went back in here, I was a bit nervous because it was flat all day, but then I think it was just pure luck that it shot back up and was able to capture some of this. But yeah, you can IPOs, you can never be sure. Some of the IPOs, you know, they don't come in and do so well. Look at Coinbase. I mean, Coinbase is an IPO that I bought into. It went up to $400 and some dollars. I actually added to my position like a dum-dum, and then the stock came right back down. And as it was falling, I tried to dollar cost average to bring my my cost basis down with it. Wasn't able to bring it down as far as I wanted to, and then had to sit there on it and hold it for a while, but it's been performing better, especially since crypto has been going back up. But Coinbase is an example of when an IPO is really hyped up, but then it can go in the wrong direction really quick. RIVN was a special case where an IPO just ended up doing really well, blowout. I heard someone say RIVN is the crypto of stocks, huge cap, no revenue. Yeah, that's kind of a true statement there, I would say. Another thing to think about with RIVN is I think there's a bit of a connection with RIVN and somewhat how some would say meme stocks. I don't really call them meme stocks. I go more for, their momentum plays. But Rivian, the way it acted definitely reminded me of GameStop, AMC, and all of the hype that went into those companies running up and then falling back down, running up again. Yeah, Rivian kind of reminds me of those type of plays more so than crypto. But yeah, I mean, no revenue to speak of, and yet it's a $130 billion market cap. It's crazy that you can have a company like that. Think about when Tesla went public way back in, what was it, 2010? It didn't shoot up to $100 billion market cap or more. I mean, it took a decade for them to reach $100 billion market cap. So yeah, there's a lot of future earnings being applied here. I don't know what the multiple is, but it must be high. I could probably look it up and see what their multiple is right now, but it's extremely high based on no revenue. So yeah, that's Rivian and the story there about it. Moving off Rivian, we looked at Tesla, so that kind of rounds up. Oh, another EV company came out, Fisker, FSR. They came out today during the media day for the LA Auto Show, and they kind of showcased their Ocean SUV, the base model, the sport model. It gets about 250 miles per charge, and they came out today, and this was like a buy the rumor, sell the news type of deal. The company was down 9.5% during regular hours. It's down another 3.5% in after hours. So this was definitely a company that might have been picked up a little bit with the other EVs rising. But the one thing I'll say about Fisker is the stock structure here, it looks healthy. It's been bouncing off its 50-day moving average and going up and to the right. Now, with it dropping so much today, it still hasn't reached, well, it broke through the 50-day moving average here in after hours, so I won't say that. But when it closed today, it was still up above that 50-day moving average, and that looks strong. But now that it's below that in after hours, that would kind of change the structure on this to being a little more negative than positive. So that's another EV play that has been doing really well, and it's kind of like they all came back down to earth today, so to speak. And maybe some of that profit that was taken was put back into Tesla. And if you think about it, maybe some Tesla traders, they took their money out of Tesla, which helped to accelerate that fall for Tesla, just to put it into Lucid and Rivian, just to try to make some money off of the momentum of those two companies. And now today's the day where they're pulling the cord and taking profits and maybe going back into Tesla. That could be something in the EV sector that could be playing out right now. So yeah, another company that I wanted to look at is Apple, ticker symbol AAPL. So Apple was up 1.6% during regular hours today. It's up a fraction of a percent, 1/10 of a percent in after hours. it's been performing pretty well over the past few days. Apple had an announcement today where they talked about a home repair or self-repair kit that they were going to launch. So if your battery goes bad or something like that, I don't recall the details of the story there, but they were going to offer some kind of a home repair kit that you could use if your phone does break somehow. So that helped Apple out a little bit. With other Dow companies dropping, it was pretty good for Apple to be up today and not down like the rest of them. Another company that did pretty well today off of Apple here is Home Depot. They outperformed and they helped the Dow rise. Well, the Dow didn't rise, but they helped it from falling. Ticker symbol HD for Home Depot. And then I've got a couple stocks I want to dive into a little bit deeper here. But you can see Home Depot, they reported good earnings. You can see here a 1 hour chart. Let's go back to the 1 day chart here. So they had their earnings, shot up nicely from it. And then Lowe's announced their earnings today, and they did pretty decent as well. And that helped to carry Home Depot just a little bit higher on the chart, reaching a new all-time high for Home Depot of $399.43. Couldn't quite break $400. It'd been pretty cool if they could have done that. But just a few pennies there short of breaking it. But that helped keep the Dow from dropping further, Apple and Home Depot. Another company to look at that got kind of beat up today was Roku. Ticker symbol is its name, ROKU. Now, they were down, drum roll, 11.3%. They're down another 0.5% in after hours. Their structure has been very bearish since breaking below its 50-day moving average back in August. And the downgrade that it got today was downgraded to a sell, and they cited revenue growth hurting or potential of growth not growing anymore. But the analyst, Michael Nathanson, he said, quote, "We are downgrading Roku to sell from neutral and lowering our price target to $220. They had a price target of $330 previously. This hurt Roku's stock price today, but that's not the only analyst who has downgraded Roku here recently. Truist also cut its price target, though it kept a buy rating on Roku, and their lowered price target is $360, and that was down from $390. So their new price target still implies a 47% upside. But there have been many analysts who have come out and downgraded and lowered their price targets for Roku due to digital advertising and it not being so strong. And that has really hurt Roku, especially since their earnings was, their guidance was pretty soft. Okay, now for the lady investors out there, I've got two companies that I just want to showcase here for you. One is Victoria's Secret. Ticker symbol is VSCO. Now, Victoria's Secret, it reported its earnings today, and they beat by 11 cents on EPS, and they missed on revenue. They guided their Q4 EPS below estimates and revenue below estimates as well. Now, the stock is up 11.9% in after hours based on this earnings report, even though the guidance going forward was a bit soft. So good rebound there for Victoria's Secret. Now, it is trading below its 50-day moving average. It's also just, I take that back. This 12% boost in after hours has now put it above its 50-day moving average. And that's the first time in the company's public history, because it just recently went public, that it's above its 50-day moving average. Of course, the 50-day moving average didn't kick in until, of course, 50 days after going public. But yeah, it is above it now. It's up here in this range at about 56.50 per share. So it's quite a bit there above its 50-day moving average. That 50-day moving average is at 54.50. So a few dollars there above it. All right, the next company is Bath and Body Works. Ticker symbol is BBWI. They also had earnings today, and they are up 1.8% in after hours after being down 1.5% during regular session. Now, they beat by 31 cents on EPS, and they also beat on revenue, but they guided their Q4 below estimates. This stock, though, has been moving all year long. It is in a very healthy structure. It is above that 50-day moving average. And again, for this almost the entire year, this stock has been moving in a very, very aggressive pattern up and to the right. I mean, look at this chart pattern. This is what you would want to see from any company you're holding. Now, year to date, they are up 148% year to date. And you can see it on the chart. Such a beautiful move. And that's Bath and Body Works, ticker symbol BBWI, if you want to take a look at that. All right, another company that came out with earnings after hours today was Nvidia. I haven't had a chance to dig through it too deeply, but I have at least skimmed over it. Ticker symbol NVDA for Nvidia. Now, I talked about this company in the Catalyst Watch video, and I talked about how it was so stretched out, this valuation, because of the aggressive run and move it's made in late October and into November. It just is just way up there. It was in this beautiful ascending trading channel, but then it aggressively punched out of there and kicked it into high gear. It was down 3.1% today, but it's up 4.58% in after hours. It just kicked into gear. And its earnings report was really good. It beat EPS by 6 cents. It beat revenue. It guided its Q4 revenue above estimates, and the Q3 earnings was $1.70 in EPS, and the revenue, it was up 50.3% year over year to $7.1 billion, and it beat by $290 million. It had record data center revenue of $2.94 billion. That was up 55%. It had record gaming revenue of $3.2 billion. That was up 42%. And the company issued the guidance for Q4 to the upside, and it's suggesting that its Q4 revenues will be about $7.4 billion. Gross margins are expected to be at 67% in Q4. That's just incredible that this company is continuing to grow. But of course, we can expect that, right? We know that our internet, our experience is going to change, and it's going to become more immersive and more 3D, especially with all the talk of the metaverse. And Nvidia is a good company for the metaverse because it will be a foundational company. You need the computing power, and where are you going to get that from? A company like Nvidia. So demand for Nvidia AI is surging off the charts right now for Nvidia, driven by its hyperscale and cloud scale out and broadening adoption by more than 25,000 companies. The Nvidia RTX has reinvented computer graphics with ray tracking and AI, and is the ideal upgrade for large growing market of gamers and creators, as well as designers and professionals building homes and workstations in their homes, right? And a company like Matterport, who does the 3D scans, can help those who are creating these spaces have a digital copy to really build out and and have a more accurate scale of what they need to purchase and supply and have parts supplied to from Nvidia. Nvidia also declared a 4-cent per share quarterly dividend, and that was in line with previous estimates too. So that's pretty cool for Nvidia. I'll go a little bit deeper this evening on Nvidia's earnings. I just need some time to sit down and really read through it. But that's what I got surface level, kind of dive into it. It was an excellent earnings. Kicked the stock up here in after hours, 4.4%. It's amazing that the company can just keep going like this. Okay, another company, Target. Ticker symbol is TGT. Now, on my Catalyst Watch video from Sunday, I talked about retail earnings, and I talked about Walmart and Target and Home Depot and Lowe's. I thought that Target would perform better out of Walmart and Target, and out of Home Depot and Lowe's, I thought Home Depot would perform better. And the stocks aren't reacting, at least the way that I think they should, to how these earnings were reported. Target's earnings were really good, but yet the stock was down 4.7% during hours, and it's flat in after hours. Now, they reported their Q3 21 earnings this morning, and it was above target again for another quarter in a row, right? This has been several quarters in a row that Target has beat on earnings. However, the stock traded lower on the news. Target reported a strong EPS upside by a wider margin than it achieved in its last quarter in Q2, while its revenue also exceeded estimates. Furthermore, the company boasted its outlook for Q4 comps to high single digits to low double digit growth. That's incredible, right? Versus prior guidance of just high single digits. So it's expecting double digit growth from store over store. This shows that Target is expecting a strong holiday season. Now, I cannot remember where I heard this from. I might have caught it reading a headline or hearing it in the background on the news, but I heard this, that customers, and I wish I could remember who said this, but they believe that customers went shopping early because of the supply problems that they were hearing in the news. Well, they went shopping early, they got their products, and now they're expecting the consumer to go shopping again, mainly due to, for a lot of Americans, their savings have gone up during the pandemic. Now, I know a lot of Americans that wasn't the case, and I feel horrible for that. I wish everybody financial freedom, financial independence, and that's one of the big reasons why I'm even here doing this live stream. If I can help somebody make a few bucks, then it is well worth it. But if that's the case, then these companies are going to report next quarter even stronger than they did this quarter. So why did Target trade lower today? Well, same store sales were solid. They were up 9.7%, improving from 8.7% in Q2. Considering that Target was lapping comps growth of a nearly 20% from the prior year period, the results look even better. The comps result was at the high end of Target's previous guidance for the second half of 21 comps, in the high single digits. And it slightly outperformed Walmart's US comps growth too, except excluding fuel, it was up 9.2%. However, Target has been beating Walmart's comps pretty handily in recent quarters, and that's one of the reasons why I figured that Target would outperform Walmart. So maybe this is more of a modest beat and being seen as a disappointment. Operating margin dipped to 7.8% from 8.5% a year ago, reflecting pressure from higher merchandise, freight costs, and higher pay and headcount at its distribution centers. Those factors are not entirely surprising given broader industry trends. Investors may nonetheless have been disappointed by their impact. Management was a bit negative on the duration of cost pressures. Target is facing production cost increases from some vendors driven by higher costs in their businesses, and the labor market remains tight across the country. The company expects those pressures to continue into 2022. The comment that may be spooking investors is Target conceding that while some cost pressures may be temporary, others look more structural in nature. Expectations were running high heading into this report, as evident by the 5% move the stock made just on last Thursday. Also, investors' strong retail sales data probably added to some fuel expectations. Perhaps investors were looking for a bigger blowout from Target's results. I can quibble about the comps not beating Walmart's by a big amount and the margin decline, but Target continues to perform well in a difficult supply environment and tight labor market. What stood out most to me was the increase in Q4 comp guidance, which is a good indicator that Target is expecting a robust holiday selling season. I think the stock is lower due to a combination of lofty expectations going in and management's cautious tone on supply chain costs. Also, Target said on the call it plans to absorb some of the higher costs itself rather than pass them on to consumers, which could pressure margins. Despite the stock's reaction, this was another very good quarter for Target, and it shows the consumer is still spending despite inflation. So that's my thoughts on Target. Let me know what you think about Target. Okay, PayPal, please. One analyst downgraded it and off it goes, and some more analysts recommend buying it. PayPal was recovering and everyone was recommending it, and then comes the downgrades today. Okay, let's pull up PayPal. Ticker symbol PYPL for PayPal. Let's pull it up here on the chart, and I'll go ahead and load it here so I can see those downgrades too. All right, it's loading. Okay, so we can see this rounding out decline for PayPal. PayPal is a company that I think is a strong company. It competes with Square. It competes with Visa and MasterCard as well. Now, PayPal, it was down 4.3% today. It's getting really, really close to that $200 mark. But here's what I see as something strong, even though it's dipping. It is getting support at $200. And that is a strong signal here that maybe PayPal has hit a floor. Now, it was down 4% today. It's flattened after hours, but the past 2 days, yesterday it was up 1.4%. The day before, it was up 2%. The day before that, it was up 3%. The day before that, it was up a fraction of a percent. And then we get to the decline, the 10% drop from earnings. But after earnings, that rebound, that 3%, 2%, 1.5%, those were good signs that I think there's a floor building here for PayPal. Now, if we look here for the upgrades and downgrades, we got a downgrade today for PayPal due to market performance. It was downgraded to market performance from outperformance, meaning that PayPal is going to perform equal to what you would expect like the S&P to perform at, what the market is going to perform at. And they gave a price target of $220. So there's still an upside there. Not a huge one, I'll admit. Now, there was also this. Loop Capital initiated coverage of PayPal with a buy rating and a price target of $269. Now, the reason they say it's a buy is that PayPal operates the most formidable two-sided fintech-enabled platform in the market. So better than Square, right? The firm says the consumer and merchant value propositions curated by the company drives tremendous network effects. The firm believes the recent 30% pullback in the stock and modest retest of 2022 expectations presents an attractive entry point. I agree 100% with Loop Capital and their assessment. I think this is a good buy the dip opportunity for PayPal. Now, let's go a little bit deeper here. We have, that was the same one. Let's go a little bit further. Okay. All right. So PayPal, after its drop from earnings right here, that 10% drop, PayPal was one of the best, I take that back. PayPal was the best performer in the sector, extending its bounce off a one-year low. And this was up against companies like Nvidia, AMD, ServiceNow, Salesforce, Microsoft, Applied Materials, who that company's been on fire recently. MasterCard, Cisco. Well, we know what just happened to Cisco. They just fell. Qualcomm, which has been hot recently. So PayPal outperformed all of those companies by just being up 1.7%. So not huge gains. And when we look at the winners and losers from today, there were not very big moves made in the market today. Majority of the market was slightly to the downside. All right, if we go back a little bit further here, we have PayPal along with Seagate Technology, Adobe, and Autodesk pushing the market higher. So this is showing that there is strength at this $200 price point for PayPal. Let's see. Let's go a little bit deeper here. A little bit deeper. All right. Here we go. This is what I'm looking for. Okay. I think we talked about this on November 9th during the live stream where PayPal makes a new friend with Amazon. Let's see. What did PayPal do here with eBay? PayPal missed revenue estimates and provided downside quarterly guidance in back-to-back quarters, producing fears that its recent woes run deeper than a faster than expected unwinding of its eBay business. That reminds me, that jogs my memory there. Remember that PayPal and eBay are, or were, or still are, or transitioning the same company, right? PayPal owned eBay. Well, PayPal is spinning eBay off until its own separate company. So for a lot of investors who don't do their due diligence, who don't dig deeper under the surface, they're going to miss this problem, or they're going to think it's a problem when they look at PayPal's numbers, and then they don't remember that eBay is a good portion of revenue for PayPal. And with that revenue being taken away, it's not that PayPal is doing worse. It's that PayPal is now going to be performing with different numbers due to the fact that eBay is being spun out into its own company. So a lot of short-sighted emotional investors, they won't think about that, and they will let that drive their, oh, we need to get out of PayPal. PayPal is no good anymore. We're going to lose money in PayPal. Well, once the split is done and eBay is not in the financials as heavily like it was in this past quarter for PayPal, and they realize that PayPal is still growing, because when next quarter comes around and you don't have the problems of this unwinding, separating of PayPal and eBay going on, and PayPal is growing at, I don't know, if it's growing at 5%, if it's growing at 10%, investors are going to see that PayPal is still growing. Then they'll come back in. So I see a long-term benefit for holding PayPal. It's not going to be a quick mover, though, because of short-sighted investors who are not digging deeper. I find this $200 price point a beautiful entry point, quite frankly. As a matter of fact, I believe it was Tuesday. I have to check my records here. I believe it was Tuesday. I actually added to my PayPal position because I think this is a good buy the dip opportunity for PayPal for long-term growth. I'm not looking at PayPal as a 2-week hold or a 2-month hold or even a 2-year hold. I'm looking at PayPal for the next 10 years. And I think there's tremendous growth for PayPal, especially as things become more digital. When small businesses open up shop and they open up a digital presence, are they more likely to go to PayPal or Square to get the buy now button on their website? I think they're more likely to go to PayPal, and that's a bonus for PayPal. Setting up PayPal on your website is super simple, especially if you're building the website on, oh, now I've forgotten, WordPress. The integrations are super simple. So for small businesses who are getting a digital footprint now, they're going to PayPal to add those buying features on their website. I've done it for myself. Back when I had a marketing company, I used PayPal, and it worked out just fine. And the integration was super simple. So these are things that small business owners are going to be looking for, and it's super simple to find with PayPal. If you look for a WordPress integration with Square, I haven't even looked, so I don't even know if it's as seamless as PayPal. But I see a lot of growth potential in PayPal over the next decade. And this unwinding with eBay, it's going to put a lot of pressure on PayPal, and investors, quite frankly, some of them aren't going to be patient enough to wait around for that unraveling to be complete. Okay, so part of your question was, some say it's a buy, some say it's a sell. I fall in the category of it's a buy. I think the $200 price target is very attractive, and I think that PayPal has a ton of growth ahead. That's my personal opinion. Use it as a data point in your own digging on PayPal. Let's see here. Let's see. There's another part here for PayPal. Here we go. Another primary component of PayPal's growth strategy is the expansion of its buy now, pay later platform. So PayPal has a buy now, pay later platform, and it has for years. I can remember setting it up on my own website years ago. So the buy now, pay later frenzy that we've had recently, PayPal has been doing it already for a long time. So they have that. Back in early September, the company purchased Japan-based Paidy, or Paidly, I don't know how it's pronounced, Paidy, for $2.7 billion, complementing the launch of its buy now pay later service last year. That was the Japan-based company. The deal, which closed in October, will expand PayPal's presence in the APAC region, building upon the $5.4 billion in TPV that the buy now pay later platform has processed since last year's launch. So PayPal is still growing. In terms of growth catalysts, let's see here. What do they say for growth here? Okay, so when I talked about growth earlier for PayPal, this article, or Newswire service, I should say, it's not an article, growth of 20% for PayPal over the next several years. So PayPal is going to grow at a 20% rate for the next several years. That's big growth, and that's pretty cool for PayPal. See, the main takeaway is that PayPal has transitioned into a slower growth period after enjoying a boom during the pandemic-fueled digital shopping frenzy. We've seen that with other digital companies as well. Business is still relatively healthy, and the new Venmo arrangement with Amazon looks like a game changer. Today's weakness simply reflects an adjustment from the lingering sky-high growth expectations that were around during the pandemic to a more cautious view that considers the intensifying macro-related pressures. Remember when I talked earlier about Target, and I can't remember who or where I heard it from, about consumers went shopping earlier because of the supply constraints they heard on the news. Well, now that they got their products, well, they're going to go shopping again. That's a potential, and that could also help boost PayPal. All right, so I've been talking quite a bit about PayPal there. I am bullish on PayPal. You're going to need patience with PayPal, but it will continue growing. All right, let's pull up SoFi. Yeah, SoFi had an offering yesterday which hurt the stock and brought it down. I think it's a buy the dip opportunity right now for SoFi. Ticker symbol is the name, SOFI. And you can see it's had a bad couple of days here. It was down 2.5% today. So SoFi bought it, sold it, love it. It's trading down after secondary offering. I'm thinking of getting in on the dip. How does 21 look? 21 looks great. It sure does. Right now, I have got a support line at $20. And if it gets to $20 or below, that is definitely a buy the dip right there. At $21, I still think it is a buy the dip for SoFi. So I do think 21 looks good. I think 20 looks better. Of course, the lower it goes, the better it looks, right? But how low can it go? And you can see it's hanging around this 21-day moving average. Yesterday, it couldn't get below it. It stayed right here above it. But today, it did sink below it. But then again, about a week ago, it got below that 21-day moving average, and it got down to that $20 mark and bounced right back off of $20. It got to a low of $19.85 and bounced right off of that $19.85. So between this price range right here, I've got $21 and wait, am I on it? Yes. Call it $21.25 down to $20 even. That's a price range right there. That is a buy place right there. That is a buy zone, I should call it, right there. Between $20 and then up to $21.50 or $21.25. $21.25, $21.50 probably at the most. So yeah, that's a buy. Earnings up, offering down. Yes. All right. So here on earnings, they beat EPS by 64 cents. They beat revenue by 10%, 277 million on revenue, and they popped. They popped quite a bit, 12.5% on earnings, and then it kind of bounced around, stayed kind of flat around the $22, $23 mark. And then, of course, the news yesterday about the offering, and that brought it down and further today. But look at this too. In between this price range of $20 to $21.50, it is still way above its 50-day moving average. So let me measure that right quick. From that 50-day to where it is right now, that's 11.8% that it's above its 50-day moving average. That's incredibly bullish for the stock. And this stock, it does move on momentum at sometimes. Do you think the bank charter could be baked in? No, I do not. Not at all. I think when the bank charter is announced, I think this thing is going way higher. I don't know how much higher, but it is going to go higher. It is going to be a big, big move when the bank charter comes through, because that's a big deal for future earnings for SOFI. And I do think the bank charter will come through. It's a matter of when, not if, for the bank charter. But yeah, and thinking about whether or not the bank charter is baked in or not, looking at earnings, right, and it bouncing 12.5% on earnings. There was nothing about the bank charter, but that moved it 12.5%. The bank charter is going to move this thing like crazy. It's going to be all hands on deck getting into SOFI when that's announced, because the future potential is so huge. Let me look here for anything new about SOFI while we're on the topic. Wow, they're at a lot of conferences coming up. 4 conferences before the end of the year. Wow. All right, let's see here. Anything new? So that offering 50 million shares. Let's see, anything else? Let's see, nothing else except for the offering that at 50 million shares. That's the only thing new for SOFI. But I think SOFI has got a tremendous platform. It has got verticals that it can sell. It can lock in one person and then sell them multiple services. And that's what we saw in their last earnings report. That it did so good for SOFI. They were able to really utilize having so many different services offered to move one customer into another one. Okay. Nothing else except for that offering. But they are at a bunch of conferences, 4 of them over the next month. And who knows? There's a Wells Fargo. There's a technology. There's an investor conference, a fintech conference. So who knows? One of those conferences, they can make the announcement of a bank charter in student loans in January. Yeah. Okay. So that's SoFi there. Yeah, I think it's a good buy the dip. And if we're looking at the chart here, let me squeeze it in. The three peaks, let me get this out. We don't need to see that anymore. All right, the three peaks right here, they're pretty consistent, getting up to about 2450. Very consistent with that being a ceiling or lid on the company. And I think once the bank charter is announced, that's when this lid that you can see here at the 2450 mark, I think that lid is going to be smashed open when the bank charter gets announced. And if I put a line right there at 2450, down just a little. Oh, right there. You can see how this past peak, it got right there. That last peak got right there. And then before it, there were two peaks. We had a head and shoulders type pattern here for a reversal. But it peaked out here on the right side of the head, the all-time high there, and the left side. So it peaked right at that perfect lid there. If you were swing trading this, there are such clear markers to do so. It's incredible. Okay, so there's SoFi. Any other companies that you want to talk about? Just leave them in the comments. Put the ticker in. We'll do it. It doesn't matter, any company. Okay, let's look at well, let's see here. We've been talking about PayPal, SoFi. Let's just look at Square. I haven't looked at Square in a while. See how they're doing. So Square was also down 2.7%, and Square is in a very weak bullish structure here. I didn't even look at their earnings when they came out. They were EPS of 37 cents, which was down 2.3%, or missed the estimates by 2.3. And then we have earnings of 3.8 billion, which missed estimates by 541 million, or 12%. So Square is looking very bearish right here. It's under that 50-day moving average, but it's also trading below its 200-day moving average. Let me pull up Square over here. Ticker symbol is SQ, if I didn't mention that before, for Square. Let's see. Okay, let's see. Canadian businesses using Square have a new and greatly improved way to engage with their customers. Square, the globally trusted software, payments, and hardware solution for businesses of all types and sizes, have launched Square Marketing in Canada. Okay. Let's see. So, where is it? So, Square right now is 147 times its future earnings. That is really high. When you think about Visa, I don't want to compare Visa and MasterCard to it, but where is... So its results were in line is what they say here on this service. I don't see any other news besides Square opening up. When was this? November 5th. Groupon and Square launched new partnership that allow local merchants to create Groupon campaigns directly from the Square app marketplace. Okay. Well, that's Square. If anyone was interested in how they're looking kind of bearish right now. Down 2.7% today. Past 2 days, though, they were climbing back up, but they're still way below that 50-day and 200-day, and that's always a bearish look for a company. Okay, so that's Square, SoFi, PayPal. We talked about Target. Any other companies you guys want to talk about? We can if you would like to. Let me just hop over here and look at some of the winners. Like I said earlier, some of the winners today, they didn't win by much. Like we've got Roblox today. It was up 7.3%. So not a lot of big movers on the upside today. Of course, there was for the downside. Let's see, Aurora Innovation, they were up 6.1. I did a video on them not too long ago. Ticker symbol is AUR. Let's go look at that right quick. See how they're doing. AUR, Aurora Innovation. They are a play on self-driving technology. Now, back when I did the video on them, it was probably back here, November 8th or so, when they were at $9.99. That's what the price was when I did the video on them. And they dipped below that. They got down to a low of $9.61. And then they really took off today. Now they're up to $10.57. They have developed and make all the technology for self-driving. They're moving into the Freightliner world to offer self-driving. You know how Walmart is using self-driving vehicles to go from, like a big distribution center to a local store. One of the southern states, is it Alabama, Arkansas? Is it Arkansas where Walmart is headquarters? It's one of those states. But anyway, they're using self-driving technology, not Aurora, but a different company. And I think that's one of the best places to start. I was just looking out back at the road last night, thinking about these tractor trailers. There are more tractor trailers on the road today than I think I have seen in years. At nighttime, the highway is hardly quiet because of the trucks just going up and down the road. And I was just imagining, these big trucks and going up and down the road autonomously with no drivers in them in the middle of the night, just moving products around. It was just some crazy thought I was having, but I could totally see it. A convoy of trucks just going down the highway, not a person in it, going from place to place. ATVI getting sued for bad stuff, but I love Call of Duty and it's very cheap. Arkansas, yep, that's right. Thank you for that. I appreciate it. All right, let's go here. All right, and let me pull it up over here. I saw the news when it came out about them. Let me just pull this up a little bit. Here we go. Okay, Activation Blizzard. November 16th, Board of Directors issues statement regarding recent article, says board remains confident that Bobby Kotick appropriately addressed workplace issues brought to his attention. Oh yeah, they've got that going on. Now I remember. They've got some stuff going on internally at the company. It's not so good. Activation Blizzard issues statement regarding recent Wall Street Journal article. That was also on the 16th. I used to invest in Activation Blizzard, but I've been out of it for a while. Let's see. On November 15th, Third Point opened up a position of 2 million shares in Activation Blizzard. Activation Blizzard CEO was aware of sexual misconduct allegations at the company for years, including an alleged, I don't want to say that, according to Wall Street Journal. So yeah, they've just got some bad stuff going on internally that they need to work out. And until it becomes a little clearer that it has been worked out, the company's stock may hurt, especially because of the ESG that a lot of investors look for. They want to see companies that are operating responsibly and cutting emissions and ESG, all that. So the stock is going to hurt until that gets worked out. So let's see, November 10th, Upper Deck announced a new multi-year agreement that will allow the company to produce trading cards, stickers, sticker books, limited edition prints, and more for most of their critically acclaimed franchises like World of Warcraft, StarCraft, Diablo, Overwatch, Heroes of the Storm, and Hearthstone, all for Activation Blizzard. Let's see what else. There's a note here on November the 10th. Microsoft looking for acquisitions regarding social and casual games. Zynga, Activation Blizzard, Twilio, and EA are reportedly on the table, and that's a report from Bloomberg. That would be interesting if Microsoft bought out Activation Blizzard. I don't know if Microsoft would, though, with the allegations going on inside the company. They would probably stay away from that. That would be my gut feeling on that. Let's see here. November 5th, Activation Blizzard confirms that starting today, and that's November 5th, the highly anticipated Call of Duty Vanguards available worldwide. On November 4th, Activation Blizzard was downgraded by Edward Jones from a buy to a hold. At least it wasn't a sell. Let's see what else do we have here. So on their earnings that they had about a week ago or so, Activation Blizzard, their Q4 guidance was a little on the weak side and delayed 2 of its larger titles. Yeah, I remember that at the time. Let's see. So Take-Two and Electronic Arts might be companies. So Take-Two is TTWO. Take-Two here, they're above their 200-day moving average. What have they done for the year? They're down 14% year to date. They've beat their past 4 earnings. Yeah, so of course this thing ran up last year. It reached its all-time high back in January of this year and has been settling down. So this is Take-Two, a competitor of Activision Blizzard. And then of course the other one, EA. That one's been around since I was a kid. They're what have they done for the year? They've beat their past 4 earnings. They're down 3.8% for the year. They had that same kind of euphoria, except let's see, they had this big peak back in July of 2018, and then a big fall. All of 2018 was like straight down for them. And that's when they kind of turned things around and started going real heavy on digital and really changed their business model. And they've been growing since. But they reached this peak here. Oh, like there's that 6:30 alarm again that I keep forgetting to turn off. The kids love it. Let's see here. $150. Let me put a tag right there. 50/30. Yes, it does. So don't feel like a baddie. It's okay. A scandal definitely impacts earnings on a couple of fronts. Number one, remember stocks, you can boil it down to they're based on what the company is going to do in the future. So if the company has the appearance that it's not going to work out, that something major could change, then investors aren't going to want to give it the multiples for future earnings that maybe it does deserve, based on their work. That's one way. So the projected way of how people feel, because remember, a lot of emotion is in the stock market that shouldn't be there. So how do people feel about the company? That'll play into how the stock reacts to earnings. And then, of course, internally, how it can affect earnings is if you have to spend, $100,000 on a company lawyer to represent the company because an employee is taking you to court or something like that, then you're spending your capital someplace that you weren't expecting to, instead of spending it to, polish off a game or maybe launch a new game or the next version of a game. So your capital allocation is now not going to that game, it's going to the lawyer. The other way that it can hurt internally is if you have a CEO that is focused on getting this game, lining up the partners, distribution for the game. Now that CEO can't dedicate their time to that. Now they have to dedicate their time to talking to a lawyer, finding a lawyer. Now their time is being split. That's going to affect earnings too. So there's several different ways this can affect earnings. I hope that helps. And like I said, I don't think this company is going to perform well until the internal stuff is resolved. And then once it's resolved, hopefully in a favor that hopefully the allegations against them are not true. Because if they are true, then that could have a long-term effect on the company going forward, including bankruptcy. If a person, if something did happen and they knew about it and didn't do anything, didn't say anything, and then it's found out in court and you lose in court, and that can cost you a bunch of money. And then if there's a civil suit, then there's just a lot of ways it could go in the wrong direction. Hopefully it doesn't. But yeah, this used to be a favorite of Kathy Wood too. But I haven't seen her buy any shares in a while of Activation Blizzard. All right, what other companies did you guys would like to talk about? Anything is on the table. We are getting a bit stretched out on time here. We've been going an hour and 26 minutes. Let's just see anything exciting. BBWI, that one's been asked here on the channel before. BBWI, Bed Bath & Beyond. In after hours, it is up 4.1%. Hearing positive newsletter mentioned. That came across the news here. Let's see. Nvidia is still up after hours. HP is a company that's been doing pretty well. It's also up in after hours today. Did I type? Let's look at this one. We talked about Victoria's Secret, but they've moved some more in after hours. They're up 11.9%. Is that where? That's where they were earlier today. Yeah. When we started the live stream. Let's see if there's any on the. Oh, there's this one. Zscaler, ticker symbol ZS. Zscaler. They have delayed their earnings due to a scheduling conflict with one of the executives. That's interesting. We talked before about whether earnings being moved around could be bad news or good news. And, when you asked me that question that night, I did some further digging on that question to try to understand it even more than I already did. And there was a survey or a study that was done on earnings being moved. I can't remember if it was Bloomberg or maybe the Washington. I can't remember. One of the mainstream medias. They did a study on this in the past, and if a company moves its earnings by 3 days, one way or the other, forward or back, it makes no difference. if it gets to 4 days to 5 days forward, it could make a positive impact. 4 or 5 days after, or moving it further back, could be a negative. And then if it got 8, 10, 2 weeks, even more pulled forward, that could be really good, or pushed back, it could be really bad. So that was some of the evidence that the study said. But yeah. Yeah, Tattooed Chef, they 14.8% off of those earnings. Lost 10 cents per share. Let's see, earnings delayed goes down. Actual earnings unofficially released, it goes down. Officially released, way up. Yep, that's just something. Oh, man. It did pull back down 3.1% here in after hours. So it's back down to that 21-day moving average. It reached that 50-day and closed the day out there. Another company I talked about in the Catalyst Watch video was Oatly. They're down in after hours. They are souring badly. So they were down 7.2% today. Just adding more pain here on this stock. I don't know if anybody's invested in Oatly or not, but it has not been a good one. And they had to recall a limited selection of products in Sweden. That's where they are down. Okay. Well, let's see. Bed Bath & Beyond, 3.7% after hours. Heading positive. Newsletter mentioned. Moderna ticks up higher on report that FDA could authorize its booster for all adults as early as this week, according to New York Times. All right. Well, that's everybody that I wanted to talk about. And talked about some of yours. All right. Well, if there's nothing else you guys would like to talk about, Viacom CBS reports most successful week ever for Paramount Plus service. Okay. All right. Well, tomorrow is Thursday. I wonder if let's see. Oh, something else here on Nvidia. I guess during the phone call, CFO says chipmaker remains committed to the $40 billion ARM Holdings acquisition. I know that's being held up and looked at over by regulators. Pfizer got close to an all-time high today. Boeing got some upgrades today. Okay. All right. Well, if that's it for you guys, we'll wrap it up here. Nothing else here that I want to get into. Okay. Well, if that's it, then thank you all so very much for being with me. I greatly appreciate it. If you haven't yet, I put out a video today about Rackspace Technologies. Ticker symbol is RXT. This is a company that it was popular years and years ago, but it changed its business model, and it's been struggling and it's been hurting as it's been making this transition. But I think that its transition is starting to pay it forward. It recently had this breakout here on its earnings. They were just so good, and these earnings, they really showed that the company's transition to cloud software offerings is paying off, especially for their own customers, their clients. And they showcase that during their earnings. So this is a company that I would suggest looking into a little bit, or digging a little deeper on. Watch the video, do your research, but you can see this thing's been beat up for a while now as it's been making this transition. On the year, it is down 15% year to date, but this drop, it was a pretty steep fall off. Tried to rebound, but it couldn't, because the information in their earnings, it just wasn't there yet that they've accomplished their turnaround. But I think they have. I think they've accomplished their turnaround now to being more cloud-based. So yeah, Rackspace, ticker symbol is RXT. I just put a video out today on them. It's just a short video, about 5 minutes. If you have time, check it out. All right. Otherwise, we'll wrap it up here. Thank you, everyone, for watching. And I'll be back tomorrow, 5 p.m., to talk about the market, stocks, crypto, and most importantly, what's on your mind. So if you are watching the replay, leave the ticker symbol in question in the comments, and we'll start the show off tomorrow answering that question. So thank you all so very much for watching, and I will see you in the next video.